Greece and the Eurozone aren't the only issues we need to be looking at, because we are now looking at the global economy nearing critical levels. You came here for the truth, so let me unveil that for you. Let's get into this. Out of USA Today, the economy grew more slowly than expected in the fourth quarter as government spending fell sharply and business investment pulled back. So just want to talk about the senseless mainstream media and their propaganda. Investment pulled back. They are suggesting, and this is true in part, that the strong dollar is sort of pushing away some of their business. And this is, as I said, very accurate for many instances. But if you just had laws and if you had regulations and tax incentives for businesses, small businesses that is, you would have a situation where we could have growth. But of course, that is not taking place. And they're talking about the government spending that fell sharply. I'll get into that in a moment. GDP expanded at a seasonally adjusted rate of 2.6% in the 3 months, and slowing sharply from a robust 5% pace in the third quarter. So they had suggested that previously they had 5% growth, but when we looked at the details that I brought to you here, we saw specifically that the 5% growth came from Obamacare, because people were forced to spend more money on their health care, and that boosted the GDP. But I tell you what it didn't boost, it's people's bank accounts, and that's just going to show you how they use these stats, and they are all fraudulent. But we always have the deniers on here. It's quite funny. So when we have this government spending, you need to realize that the government doesn't get its money from thin air, or at least it shouldn't. It's getting it from the taxpayer, and that's the reason why we have such a big issue, because you keep siphoning more wealth away from them, and you're using it to boost up your GDP numbers in any way possible. And of course, it's a train wreck waiting to happen. This is the Fed of Philadelphia, Charles Plosser. He had a few things to say about interest rates and inflation. And they asked him, given the low level of inflation, what's so dangerous about pressing for faster growth? That's right, because the New York Times, the Fed itself, and the mainstream media, happens to be the New York Times, and we have all of those in the finance industry wanting perpetual growth. So you could never have a decline. Anytime there's a decline, they want you to bring the interest rates down to 0%. They want the loans to get out there to the banks, and they want all of the money siphoned away from the central bank and put into the commercial banks so that they can get their CEO bonuses and so on and so forth. But here we are. Let's look at what he said. I would prefer us trying to be a little more, I guess Greenspan would have called it preemptive, but monetary policy works with pretty long lags sometimes, and so I think we have to be prepared. I believe us acting a little earlier and being able to go gradually than having to wait a long time and having it go rapidly. This is something that I've talked about before, where they always continuously go at a very slow rate. They don't increase it from 0% to 5% overnight. They do so in very, very small steps. But the problem is that they're always too late, because if they react too early, then the markets get upset. So they're always doing it too late. And even when they need to bring the interest rate up much faster, they don't do that, because that again will upset the market. So they're forced into doing it at a slow rate. The only time they didn't do it at a slow rate, we witnessed this back in 1980 when Volcker had to increase them dramatically in a short period of time. And what did that do? It slowed everything down, including the inflation rates. So they would have to do this again, but I really don't think the U.S. government could afford much higher of an interest rate than we are at now. This is out of the Washington Post. They reported that D.C. ranked the 10th in the most millionaires in the country per capita when compared with states. Right here, D.C. has the third highest percentage of households earning $150,000 a year. And the reason I mention this is simply because we have a great disparity that has been formed. You have those in Washington, D.C. making all kinds of money, earning like crazy here. At the same time, you have particular cities and states that are in a very, very big problem. They're unable to earn a solid income for themselves, not to be able to live wealthy and buy their Mercedes-Benz and so on. They just need food to eat. But there are so many who rely on the food stamps and other government programs. So you have increased government spending, all right, but it is surely not coming from people who are buying things like their Mercedes-Benz, unless you live in Washington, D.C., apparently. And then you look at this, just a breakdown. Salary it takes to live comfortably in these expensive cities, Manhattan and Brooklyn, San Francisco, all near the top, Washington, D.C., about 6th place there, it looks like. And you have these cities which have become for rich people, and then a very big divide in between the poor that live there that are struggling to survive. So I'll move on into this right here, and this is HRES 41, expressing the sense of the House of Representatives that the federal government should not bail out state and local government employee pension plans or other plans that provide post-employment benefit to state and local government retirees. That's right. If you run into a financial crisis because you guys gambled all of the money away with your pension money, well, you're not going to get bailed out. And this is a very scary thought because the individual, they didn't have anything to do with the gambling. They don't want any of that. They just want their pension money available to them when they retire. But guess what? The pensions are already being looted in different areas all around the world. I've done the videos about that before. In this HRES 41, they talk about the maximum amount of debt that they are in and the fact that they can't go in any more debt. So this is very, very frightening to anyone who has a pension plan. If you want to know about how they're stealing the pension plans, it was probably about a few weeks ago where I did a video. So check that out. You can go back in my videos and take a look. And I will show you specifically how they are stealing people's pension plans. In my book, I talked about pension plans and Social Security, specifically talking about it works like any other Ponzi scheme whereby new people paying into this pool of money are funding the people receiving the benefits now. As long as the money flows in, the system can theoretically continue. But when you have increased interest rates on the government, when you have more debt, you cannot sustain this system. It doesn't work. You need more young people paying into the system for those retirees. Very, very, very big problem. Eurozone officials are increasingly worried that Greece's brinkmanship over its bailout will plunge the country into financial chaos after its finance minister said on Sunday that it would take up to 4 months to agree to a new contract with creditors. But at the end of the month, Greece's bailout of 172 billion euro is expiring. So how exactly are they going to make up the shortfall? Well, you can expect that somebody else is going to be there to stick out their hand and bail them out. That's what's going to happen, or they're going to be in crisis mode rapidly. What happened initially to really put a damper onto Greece, that was the credit default swaps. So let's keep an eye on those, particularly if they start taking effect yet again around the world. This would be very interesting to see how Greece is able to handle this. See, we have a situation where Washington, D.C., everyone's living just fine and dandy, but then you look over in Greece and you have a big problem. But you know what? It's not just Greece either. Look at this. Shanghai composite down significantly over the past couple months here. Going to show you the volatility that is occurring and that all markets are interconnected in some way. Yes, we can have those markets which are increasing at a time when everything else is decreasing. Particular stocks could be doing better than ever, yet the stock market is moving down. You need to realize that overall the general economy is just in a downward direction. Look at how it has been. Many times I've been showing the charts where we have this never had this bad since Lehman Brothers fiasco that occurred. The same things are happening right now. Look at this, all the way to Brazil. You have the surplus going downwards into the negative. The federal government debt increasing significantly over the past couple years. And again, you go look at their fiscal deficits, their fiscal balance, I should say, really they're down in downward direction. Current account balance, their interest balance, everything is moving downwards. They're hurting right now, even though they're part of the BRIC nations, which, I do agree that in the long term, they're going to do well, these BRIC nations, but in the short term, they are subject to maximum volatility, and that is occurring right now before our very eyes. You have a big situation right here where the stock markets around the world could be fluctuating up and down, but you look at the actual wealth of the individual citizen and it's on a decline on average, depending on where you look around the world. This is being an issue. Then we talk about Social Security and the pension schemes where the governments, because of the debt that they're in, are unable to afford these programs for the people. So what are they going to do? Well, they're going to have to steal it from somewhere else, or the Federal Reserve is going to have to pick up the tab. The central banks in your countries will have to pick up the tab. If they do so, they're going to create massive levels of inflation. If they don't do so, there's going to be riots in the streets. There will be blood in the streets. The military-industrial complex is ready to go because they have the militarized police. They have the army and the militaries waiting to get their boots on the ground. And this will be a very, very interesting scenario that could play out. If you found this video informative, please give me a thumbs up, and don't forget to become an insider. The Insiders is where I give out all my best intel for free, and that is available at themoneygps.com. You just scroll down to the bottom, fill in your email address, and you get occasional emails from me with good, short, concise info.